Before we start the video, I want you to subscribe to the best Telegram channel at the first link in the description, where we show our earnings on cryptocurrencies, and not only. Our capital that we manage is more than $3 million. Thanks for subscribing. Also in the description is a links to verified exchanges when you register, on which you get a welcome bonus from me. Let's get to the video. A year ago, the crypto market was valued at a record $300 million, and almost half of that value came from Bitcoin alone, because at that time, you could get 67,000 for one Bitcoin. And the famous legend about the price of 100,000 seemed to be quite real. But a year has passed, and I can say that we never saw the cherished 100,000. In fact, during the whole year, Bitcoin slowly but steadily went down, because of which we get a modest 15,000. Many things influenced this, from the cosmic inflation in the USA to the recent bankruptcy of the FTX exchange. And after the sensational scam from Curly Sam, everyone is wondering, where will Bitcoin go? Will it recover to 20,000, or will it hit a new bottom of 10,000? These are the questions we will be answering in this video. In fact, based on the fundamentals as well as the technical, it will be clear what to do in this situation. And today you will learn, why is Bitcoin at risk of falling to 10,000? Why are miners selling the most Bitcoins in the last 5 years? How will the cryptocurrency exodus from the exchange affect the market? And how to make money on it? Hello everyone, you're on the Cryptanic channel. I want to thank everyone who supports our video with likes and subscriptions to the channel. We see your activity very well, and that is why we prepare for you incredibly cool video about Elon Musk. After all, at the beginning of the USA elections, Musk is actively going to go into politics, together with Trump. And, judging by his latest tweets, we can see a crazy pump of crypto, and not only Dogecoin. We'll break this topic down in a new video, and the more likes you get, the sooner we'll post it. More information about Elon Musk, and not only, you can find in our Telegram channel. To those who subscribed, thank you, and here we go. The collapse of FTX sowed doubt on the part of everyone who invested in crypto. At the moment, we are balancing on a thin line between another major decline and a potential recovery. To have a clear picture of where the market, and for the most part Bitcoin, will move, let's break down the most important indicators that will affect prices. The first thing I wanted to point out is how much investor confidence has been killed, so you wonder if it is worth keeping your money on the centralized exchanges at all. And we looked at which exchanges might be next after FTX. This led to the fact that all the Bitcoins that entered the exchanges since 2018 were completely withdrawn to the penny and sent to cold wallets. It would seem that there is nothing wrong with this, but the volume of trading has dropped wildly. For example, before all this FTX hype, Bitcoin was showing up to $400 billion volume per day, and now we get no more than 15. And, unfortunately, most of that volume is created by sales, which makes the price go down. This is noticeable on a lot of other tokens as well, but nevertheless, there is one base coin, which recovered quite quickly after a week-long sell-off. And that's Litecoin, which showed over 30% growth. And you know who was able to profit from the movement of this coin? Members of our Telegram channel, of course. Because they got detailed analytics in time, opened long deals, and then started to fix their profit. After all, subscription allows you to receive daily information from Cryptanic analysts to earn money on crypto. So, if you do not want to spend extra time on market analysis, leave it to the professionals. For more information, you can follow the link in the description. Regarding massive Bitcoin outflows from exchanges, in just 1 week, 134,000 Bitcoins left their accounts. That's over 200 million in current prices, of which about 1.5 billion came from USA platforms, and the futures market volume, altogether, is back to levels. After that, it will take a long time to get it back to its previous value. You may think that if users started to leave exchanges, it means that DEX platforms have become more popular. Well, I would not say so, because the market as a whole declined. The total DAFI is now less than 20% of last year's peak. The drop in volume shows us how active people are willing to sell and buy crypto. Due to the fact that these numbers are low now, it's easy to guess that interest in crypto has fallen, and the market, as if it is standing on the handbrake and waiting for its movement. This movement 100 could be because we have repeatedly said that inflation in the USA is beginning to retreat gradually, which led to an increase in the stock market. But then Crowley came down on our head, along with the FTX exchange, after which everything went down the drain. If before the crypto and stock market moved in unison for a long time, now we're seeing this crazy gap, which could cause the short pause to lead to a decline. When discussing the future movement of Bitcoin price, it is simply impossible to ignore one of the main pillars on which this coin is held. That, of course, is their majesty, the miners, who have to tighten their belts, because at the moment their earnings are at their lowest level in the last 5 years. And if you ask who still has the strength to sell their Bitcoins after a year of suffering and pain in the crypto market, the answer is simple: miners. There are two main reasons why miners are willing to sell their coins. On the one hand, when there are huge profits and Bitcoin prices are high. After that, the increase in miners' sales signals a serious revaluation of the crypto market, and usually occur in time and at the end of a long-term bull market. And on the other hand, the reasons for selling can be extremely low Bitcoin prices. It becomes expensive to mine and profits fall. Bitcoin miners then sell more than usual to cover current expenses and stay afloat. I think you have already guessed that it is exactly the second option we are seeing right now when, on November 9, Bitcoin fell to a low of 15,000. This left even the biggest miners at a loss. The indicator that tracks the profitability of Bitcoin mining is the cost of production metric. The indicator includes a red band in the price range, below which mining becomes unprofitable. It looks like this. We can see that falling below the top end of the range leads to the capitulation of retail miners with the weakest equipment. Currently, that level is around 26,000, and falling to the bottom of the range causes mining costs to exceed profits, even for miners with the best equipment. Right now, that level is around 16,000. This means that the only way to keep mining today is simply to sell the accumulated reserves with which miners can maintain current operations. Such surrenders by miners usually coincide with the bottom of the Bitcoin price. On the long-term chart, we see that miners are experiencing the highest selling pressure in 5 years today. The last time the index saw such high levels was at the peak of the bull market in 2017 and at the end of the bear market in 2018. Most recently, Canaan, which mines Bitcoin, released its unofficial Q3 earnings report, saying the firm's profits were down nearly 75% compared to Q2 2022. The company earned just $320 million, down from $130 million in the previous quarter. Canaan also said it is selling mined Bitcoins to pay off its debts. In recent days, we have seen a sharp decline in miners' reserves. So it seems that the decline in Bitcoin price, as a result of the FTX bankruptcy, was mainly caused by the surrender of miners. This is confirmed by the chart of Bitcoin inflows to exchanges from known Bitcoin mining pool addresses. The exceptionally high breakout in recent days coincides with a fall in the price of Bitcoin. According to a report from Compass Mining, Argo mined 204 Bitcoins in October, but needs to generate significantly more revenue to cover its debt. Argo also sold 579 Bitcoins in October. This brought the total amount of Bitcoins to 138. According to Compass Mining, also this Bitcoin stockpile, along with the Bitcoins mined in November, will still not be able to cover the costs. Miners are already starting to prepare their Bitcoins for sale. In fact, in the last few days, Bitcoin inflows on Binance showed more than 138,000 coins in one day alone. And, as you understand, this is not done to just keep them there. In the coming days, this could cause miners to actively start selling Bitcoins to cover their costs and also to equalize the cost-to-profit ratio. Understandably, these sales will lead to another decline to a local bottom of 15,000 or less. the Bitcoin price continues to trade in the same range with very low volatility over the past couple of days. Since the price has fallen below 20,000, the markets have plunged into a deep, so-called bear well. Therefore, it has become important for the Bitcoin price to regain those levels in order to resume the bullish trend. But will Bitcoin rise above these levels? If so, where can we expect a sustained rebound? Previously, the Bitcoin price has experienced a couple of bear markets and, each time, marked a new bottom. Back in 2015 and 2018, the bear market squeezed more than 80% of its intermediate highs. Therefore, given previous price trends, the current bottom is projected to be around 11,000. From a technical perspective, the Bitcoin price is in a wide trading range of 15,800 to 17,100. As the Bitcoin price has fallen below the Fibonacci level of 17,150, the chances of a downtrend remain high until the next support area of 15,800. On the one hand, Bitcoin's immediate support is at the 1,530 level. If the bearish trend continues, the price could fall to 13,850. Since the RSI and the 50-day moving average indicate a bearish trend, the Bitcoin price could fall below 15,800 if the current support does not hold. Collectively, the Bitcoin price is expected to remain below 20,000 for a long time as the bearish trend could fluctuate over a long period. In the meantime, bulls may try to support the price to some extent, but ultimately fail, because the high volume of miners selling destroys any chance of growth. At this point, it is no longer inflation that becomes a barrier to growth, but the fear that no one knows what are the surprises the market has in store for us. In a way, FTX is the tip of the iceberg, because over time a huge amount more news about how this or that cryptocurrency platform becomes insolvent and repeats the fate of Celsius pops up. It's worth noting, though, that there is already such a candidate. After all, recently, major platform Genesis blocked user deposits and withdrawals as it faced a liquidity crisis. And it's only been a little over a week. Accordingly, when we get investor uncertainty, miners' capitulation, and high chances of bankruptcy of many crypto companies, growth is out of the question. The first glimmers of recovery we will see only when investors will understand that a similar story with FTX, at least in the near future, will not be repeated. This wave of the local crisis should wash away the weakest companies, leaving only leaders which really can be trusted. And, of course, the return of interest, trust and charity, in the form of lower inflation, will be able to do their job, and we will see the long-awaited growth. But for now, let's be patient and watch the market closely. The best way to do that is via our Telegram channel, so subscribe and write in the comments. Do you think Bitcoin will be at 10, or will it still be at 20,000? Thanks for watching. See you in the next video. See you soon.